Greetings and welcome to Mail.ru Group's third quarter results conference call. At this time, all participants are in a listen-only mode. At the conclusion of today's conference call, instructions will be given for the question and answer session. As a reminder, this conference call is being recorded. I would now like to turn the call over to Tatiana Volochkovich, Director of Investor Relations at Mail.ru Group. Ms. Volochkovich, you may begin.
Hi, thank you all for joining us today for Mail.ru Group's third quarter 2019 unaudited financial results conference call and webcast. I'm joined here today by Boris Dobrodeyev, Matthew Hammond, and Fyodor Rubtsov. Before I pass it on to Matthew for a 3Q summary, I will read the safe harbor statement. Please note that this press release contains statements of expectations and other forward-looking statements regarding future events or future financial performance of the group. The forward-looking statements in this release are based upon various assumptions that are inherently subject to significant uncertainties and contingencies, which are difficult or impossible to predict and may be beyond the group's control. Many factors could cause actual results to differ materially from those discussed in the forward-looking statements included herein, including those referenced under risk factors in the group's public filings. We would like to direct you to read the forward-looking disclaimer at the back of our release, particularly with respect to the possible differences between management and IFRS accounts.
Thank you. Good morning and good afternoon. It's Matthew Hammond here. I hope you've had a chance to look through our Q3 statement, which in order to ensure maximum transparency runs through almost all the areas of our business in great detail. As a result, here I'd like to focus on a number of key points which we think are the most important. First of all, Q3 delivery. We're very pleased with our Q3 performance, despite the somewhat challenging macro backdrop and significant base effects for the core advertising and games business, and especially given no new games launched during the quarter, we've delivered strong growth in all areas. Advertising revenue grew around 22%, and despite no new launches, games segment revenue grew by 25%, and new initiatives expanded by over 140%, with Q3 revenues in total growing 25% year over year, and delivering improvements in underlying profitability, with margins increasing 2 points year over year. Secondly, VK market and outlook. We've seen some commentary questioning the competitive position of our core VK business. We'd really like to address this head on. The first thing to say is that we've always operated in a competitive environment, but VK's position remains unchanged. To illustrate the underlying strength of VK, I want to draw your attention to some operating metrics. Having quadrupled revenues in the past 4 years, and despite the base effect this creates, VK revenues have grown 25% in Q3, and we remain on track to meet our guidance of doubling revenues again over the next 3 to 4 years. VK user numbers continue to grow despite the social network already covering around 77% of the Russian online population monthly. Its 70 million Russian MAU is up 2.4% year over year in the third quarter. According to Mediascope, VK offers the highest user sticky factor across all social networks and video platforms present in Russia at 55% versus 44% for Instagram, 41% for YouTube, or 25% for TikTok. Time spent on VK also continues to rise, up 9.3% year over year to around 35 minutes a day on mobile. This compares to around 25 minutes for Instagram, 21 minutes for TikTok or Yandex.Zen. Total daily time spent for VK stands at 800 million minutes, which is 2 times more than Instagram and 70 times more than TikTok. Additionally, share in time spent has been stable in the 10 to 12% range of cross-device online time spent since the beginning of 2017, and we see no changes in that going forward. Engagement metrics also continue to rise, and I really want to give you some concrete examples of this. In Q3, daily messages delivered increased by 26% to 10 billion. Live stream views grew 39%, posted streams 219%, and video views 45%. We give you these stats to illustrate the highly engaged and growing nature of our user base. CTR also continues to increase, and we further reduced CPL by 32% year to date, which continues to improve return on investment for advertisers. Q3 advertiser number was up 16.5% year over year, driven mainly by SMEs, and we think VK is in a strong position to continue to benefit from ongoing shift of advertising to digital and within that to social networks. To summarize, VK user numbers continue to grow, engagement is rising with results in rising time spent, and VK ad revenues, despite a high base, are growing faster than the market. We stopped reporting separate VK revenues at the beginning of this year, simply in order to better reflect our strategy and the way the business is managed and the groups and the units' interconnection within our ecosystem, where advertisers increasingly source ads from all mails platforms through MyTarget, and hence VK is shown within social and communication segment. However, we have listened to feedback, and hence we've given Q3 revenue growth in order to confirm continued progress and to address any misplaced concerns head-on. Third, year-end outlook. While we see no change in the macro backdrop and the H2 base for advertising revenues remains high, we're happy to reiterate the comments made with the H1 results that we expect H2 advertising revenue growth will be at least in line with H1. As far as games is concerned, in our 2019 budget, we had assumed the launches of Aftermath and 2 versions of Warface Mobile in the second half. Given the large franchise launches of Lost Ark and American Dad, as well as the scheduled launch of our international PC games platform, we decided to shift the Warface launches into 2020 to allow them to benefit from cheaper advertising versus the peak Q4 season, while maintaining a focus on existing pipeline into year-end. Aftermath will no longer be launched, given initial retention results. While this will of course affect Q4 games revenue, we are nevertheless happy to reiterate our full year 2019 guidance. Fourth, progress across partnerships. Over the last 12 months, we've announced a number of partnerships, and I want to give you a brief update on each of these. First, AER. AER is now closed and operational. Dmitry Sergeyev, Deputy CEO of Mail, is now serving as co-CEO, and Boris Dobrodev, CEO of our company, is the chairman. We'll see the ongoing and deepening integration over the next few months, and we'll see some benefits in Q4 before the wider benefits are seen in 2020 onwards. Second, in October we announced that we now plan to enhance our customer value proposition via a payments JV signed with Alipay, which is expected to be concluded next year. Third, the O2O JV with Spare continues to make strong progress towards closing, with binding documents expected to be signed prior to year-end. In the meantime, both Delivery Club and City Mobile continue to accelerate and gain market share, with the former growing revenues over 190% in the third quarter and reaching 3 million orders a month, and the latter reaching over 300,000 daily rides. As previously stated, the JV will focus on maintaining its strong leadership in food delivery and be a strong number 2 player in its selected markets for mobility. The JV will have sufficient resources that both businesses are expected to be fully funded to reach break-even. Finally, the Modern Pick transaction documents have now also been signed, and the deal is expected to formally close shortly. 5. Strategy. Our strategy remains unchanged, and we continue to put the user at the heart of everything we do. Throughout our history, we've built an unparalleled platform, and our product range now covers almost all of the online needs of the user. We will now further consolidate our position through loyalty programs, payment systems, shared ID, and hence there will be less near-term focus on M&A, while we move back to a net cash position, which should be a relatively short path for us given the healthy cash conversion of the business. The company's objective is to support the seamless operation of all divisions and achieve synergies between projects, connecting them through a unified infrastructure and service offering. We will also continue our efforts around ad tech in order to continue to gain advertisers' market share, with special focus on expanding the SME offering, along with the reductions in internal competition and duplication of development work. The goal is to eliminate internal competition in ad tech, unify the SME customer base, and focus purely on the best and most balanced solutions to advertisers. 6. New initiatives. We've seen very strong growth in excess of 140% in the third quarter in the new initiative segment, which generated over 1.3 billion in revenues. Here we're seeing strong growth in cloud, online education, and EULA amongst others. EULA continues to perform well, with revenues growing 1.7% 1.7 times, not 1.7%, forgive me, year over year, and we're happy to reiterate the guidance of revenues for that business of around 2 billion rubles this year. I would also like to draw your attention to Pulse, which is our recommendation and news management system, which now has around 35 million monthly active users and continues to see further strong growth, We'll be talking more about this over the next few quarters. 7, and the final point, regulation. Our shares have seen some pressure on the back of some of the latest regulatory initiatives, especially the foreign ownership limit discussions. We will continue to consult and cooperate in related discussions, but as we've said before and are happy to reiterate again today, we continue to believe that the latest proposals around the foreign ownership limits should not impact Mail or our shareholders in any way. I would also draw your attention to our Articles of Association, where it has always been the case that a majority of votes must be controlled by an approved Russian party. This continues to be the case, and along with our largest shareholders, Naspers, Tencent and Alibaba, we do not expect any change in this. In closing, the third quarter for 2019 has been another successful period for us. The business has delivered strong top-line growth and improving profitability. We've made significant progress in our JV partnerships, along with our strong partners, including Alibaba, Ant Financial and Sberbank, and we expect further progress prior to year-end. Notwithstanding some games launch slippage in Q4, we're happy to reiterate our full year 2019 guidance, and with that, we'll open up to Q&A.
Thank you.
Operator, we'll take questions now, please.
Thank you. If you would like to ask a question, please signal by pressing star 1 on your telephone keypad. If you are using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, press star 1 to ask a question. Additionally, if you would like to ask a question via the web interface, simply type your question in the Q&A box and click send. We'll now take our first question from Miriam Adisa from Morgan Stanley. Please go ahead, your line is open.
Good afternoon, everybody. 3 questions from me. Firstly, just on the AER JV, now that has closed, if you could just give a bit more color on what you're seeing on the first integration test between VK and AliExpress, and then also perhaps quantify the contribution to revenues next year looking into 2020. And then secondly, on Delivery Club, as you've shifted the business to first party, could you talk about the impact this is having on the marketplace business? Are you seeing any cannibalization, or do you believe that the growth there is all additive? And then finally, just could you talk a bit more about the ambitions of the payments JV, and potentially if you feel that there are any conflicts with another one of your partners, Sberbank, given their dominance in the payment space? Thank you.
Thank you for the questions, Miriam. I'll start on the quantifying on AER, and then I'll hand over to Boris. Obviously, we can't break out a separate AER line. I think that I can really only refer to the statements we made a few moments ago, that we will see some benefit in Q4 before that increases in 2020. But AER is obviously now just another third-party advertiser to us. It gets treated exactly the same as all other advertisers, and I can't quantify an individual advertising line from AER any more than I could from Colgate or Nissan.
Yes, thank you. So I would address the Delivery Club question. So we're very positive about Delivery Club growth, and what even positively surprises us that 1P growth comes not at cost for our marketplace business. Actually, we see the opposite. We see that it boosts a lot our marketplace business, even we don't have any special promo activities for it. So I think for us it's a big competitive advantage of having a big developed leading marketplace business, as we have all legs and each one contributing to another. Long term it would also support and make our business very stable, because we think that 1P business brings a lot of high quality user experience and very high user retention, and bring in new supply, whereas marketplace business is a much more profitable business. So I think they very well balance each other. So again, to reiterate, we see good growth in our marketplace business standalone. So in terms of payment JV, I think that we have ambitions to build one of the best digital payment systems, both for the business as well as for the end user. So we want to become leading e-wallet. So as you know, VK Pay has about 13 million users. So our goal is to significantly first multiply the amount of these users, as well as significantly increase their engagement. And also on the other hand, these days we're starting to talk, and not only to talk, but also to act much more as an ecosystem. And we think that to have a VK Pay solution in our ecosystem is incredibly strong. If you look at us, we now have exposure to e-commerce, we have exposure to communications, we have our mini app ecosystem, which is developing very fast. And if you put payments on top of it, I think we have quite a robust base for the leading ecosystem in Russia, which we want to become in the next couple of years.
And on that point, do you feel that there could potentially be any conflict with Sberbank as you integrate VK Pay into some of your apps, such as Delivery Club and City Mobile?
Yeah, I think we can always work with multiple partners and we'll find a solution.
Thank you.
And now we'll take our next question from Slavoj Teterev from Goldman Sachs. Please go ahead, your line is open.
Yes, thanks for the call. Firstly, how do you generally think about the medium-term growth and profitability trajectory for your new initiatives, in particular cloud and education? And secondly, can you help to reconcile your EBITDA number with a leverage increase? So what were the major drivers leading to the growth in your leverage throughout the quarter? Thank you.
So I'll answer the first one. So actually we see very good growth, triple-digit growth in our cloud business. Yeah, it's still not very big, but the growth is very promising, and I think out of the new generation players, we're one of the most successful ones. So we see a very good traction there, and we look at our cloud business as a part of our big B2B offering, including our database and our communication tool. So we are starting to develop our B2B industrial internet narrative here. So in terms of online education, we've always been bullish on online education, and we see our online education asset performing pretty well, also showing pretty high growth as well as pretty decent profitability. So we think that this sector still is not a major driver of our business, but we think that it's a very good growth driver for the future, and we remain constructive on it, as well as EULA. So these are the key three pillars of growth behind our other section, and probably we're equally positive on them to grow well in the future and to contribute even more to our business. And Fyodor Rubtsov, our CFO, will address another question.
Yeah, so with respect to leverage, as we have said, we just contributed $100 million into our AR JV, which basically accounts for the increase in leverage. But I guess your question was more about how our dynamics in EBITDA compares to the dynamics in, say, the operating cash flow that you would see in the statement of cash flows, because there is some difference there. And the key reason for that is basically the financing of the assets which are now classified as assets held for sale, or which are already part of our JVs, particularly Panda and Delivery Club. So basically, if you exclude the financing of those verticals, then the dynamics of operating cash flow would be roughly the same as the dynamics of EBITDA year on year.
Thanks. Can you help me to reconcile? So basically you're trying to mention that AR JV contribution already happened in Q3. Is that the case?
I mean, we've been financing Panda all this time, right? However, it does not come into our management accounts EBITDA, as that has been into assets held for sale for a while, and the same for this quarter for Delivery Club. So it does not come into the management accounts EBITDA. However, it does come it does affect the cash flow from operations in IFRS. So we're basically financing. We've been financing those verticals, and the effect of the financing is the key difference between IFRS operating cash flow dynamics and the management accounts EBITDA.
Understood. Thank you.
And now we'll take our next question from Vladimir Bespalov from VTB Capital. Please go ahead, your line is open.
Hello, congratulations on very good numbers, and thank you for taking my questions. I have a couple of pre-technical questions. First, when I look at your revenues reporting under FRS, and there is a big revenue gain from time differences this time. It was absolutely different in the previous accounting. So maybe I understand that you changed your approach to revenue recognition in games. So maybe you could provide more color on this. First, have you discussed this with auditors, and are we going to see this going forward when you publish audited numbers? And then how should we see this going forward? Should it be like I understand this probably a one-off in the third quarter, and then maybe the difference will be much smaller in subsequent quarters. And the other technical question on the numbers is on your marketing spending. The growth in the third quarter was pretty small. So was it a one-off, or this is a kind of longer-term change, and the growth of marketing spending is not that required given the assets which are currently consolidated by mail.ru? Thank you.
Yeah, thank you for the questions. So I'll first address the deferred revenue question. So as you know, we have always said and looked at the gaming revenue based on management accounts, which is essentially a cash accounting for the gaming revenues, and that's the way we're continuing to look at it, as shown in our segment reporting. However, in IFRS, there is this deferral of revenue adjustment, which is subject to very significant judgments, and is based basically on the expected lifetime of the games, users, and individual in-game items. So basically, there are a lot of assumptions in that calculations, and that's kind of the key reason why we have always excluded that from management accounts. Then second, this adjustment is actually not legally based. I mean, we don't owe the users anything legally as soon as the users have paid for the games. So these are the two key reasons we have always excluded it. However, recently, based on the feedback, particularly from our shareholders, from our investors, we have worked to try and bridge the gap between management and IFRS accounts. So basically, we've implemented some more detailed statistics into the product gaming systems to try and calculate, try and make the assumptions more accurately with respect to the expected lifetime of the in-game items. So now basically we've been able to implement those in the systems and to discuss those with the auditors, of course, because, well, as you know, the quarterly results, even though those are not audited, they are reviewed by the auditors. So obviously the auditors did have a look at those, and now we are able to kind of come up with more detailed and more kind of well-calculated adjustments for the revenue deferral. However, it still does not affect either the way we report the management accounts or the way we manage the business. And addressing your question about what is going to happen to this adjustment going forward, yes, indeed, you're right. This is a kind of a one-off effect right now, and going forward, since it's now a more detailed calculation and the overall deferred revenue balance is now reduced due to this calculation, we do expect the difference to become smaller in the prior periods compared to what we have seen in revenue deferral in the past. And then addressing your marketing question, well, basically, if you look at our marketing dynamics on the same consolidation basis that we're using for our financials post the disposal of or showing as assets held for sale of Delivery Club and Pendal. So basically now, yes, the growth rates have come down, and that is largely a function of two things. First of all, it's a function of our gaming division, where marketing is in its turn a function of new launches and the product cycles of the respective games. And then second, it also shows the improvement in the in the profitability of EULA, and so basically those are the two key factors that have contributed to the dynamics in marketing expense this quarter.
But for this marketing expenses going forward, should we expect similar dynamics, or it will return to growth similar, let's say, to the revenue growth going forward? How should we look at this?
Well, as ever, that will be a function of the game launches first, and of how successful those game launches are and how marketing support each game requires. So we'll be managing it within the EBITDA of the gaming business unit, which I think we have given guidance on. And well, so basically that will be the key variable, I think.
Vladimir, it's Matthew. To really summarize your answer, it is unlikely that marketing falls as a percentage of sales over the medium term in any dramatic way.
Okay, thank you very much.
Our next question is from Cesar Tyron from Bank of America. Please go ahead, your line is open.
Yes, hi. Thanks for taking my questions, and congrats on the results. The first one was on the food delivery. I mean, the quarter was particularly strong on the top line. Can you please talk a little bit about it? Is that mainly market share gains? Is that expansion in new cities, new restaurants, or do you think it's also related to significant subsidies that you would have implemented ahead of the closing of the JV of Sberbank, and possibly if you can tell us if the losses at Delivery Club materially increased in this quarter. Second question would be on games. Just wanted to better understand the no launch in the quarter. Was it related to a particular game which you have delayed or decided not to launch? And if so, if you could explain why. And there's just a follow-up on this IFRS change. I just wanted to be 100% clear. Going forward, are the management accounts going to be almost aligned with IFRS? Sorry, the IFRS is going to be almost aligned with the management account, or 100% aligned? And is that both on the revenue and the EBITDA? Thank you so much.
So thank you for the question. In games, there were never any launches planned in Q3. It was always the plan. As you know, it's always difficult to plan exactly when games come out. You put them out as soon as you have what you consider a good product. As you know, games launches can be somewhat of a moving feast in terms of the date. But at the beginning of the year, we never expected that there would be any launches in Q3, so nothing has changed in that respect. I think looking forward, I think we're very happy with the pipeline, and we feel confident about the games pipeline going forward. In terms of IFRS, quite clearly after this adjustment, as you know, the two most sizable differences in IFRS management accounts was one, the performing of acquisitions and disposals, and the second was the timing on games revenue recognition. Quite clearly with the adjustment to an IFRS games revenue recognition, it will be much closer to management accounts. This is not to say it will exactly mirror it, because of course you'll still have the pro forma adjustments. And I'll hand over to Boris on Delivery Club.
Yes, on Delivery Club, as I said before, I think we had very strong traction across the board, both in marketplace and own delivery. I think we also had very well evenly distributed traction across geographies in Russia. So I think the team did fantastic job in expanding its 1P, in significantly expanding its presence in terms of QSR restaurants. Also significant expansion in logistics operation and in the number of couriers as you see across the streets. So overall, it gave a very strong cumulative effect of growth, and I think we do see continuing strong expansion of Delivery Club business going forward.
Cesar, I would just add to that. Clearly, with 190% growth, it's simply not possible to do that with just one factor. Everything needs to be, especially when we're dealing with 190% growth on already relatively big numbers. What you've seen is that the business has moved from 2 to 3 million orders over the space of the last 4 to 5 months. So what you've actually seen is an expansion in orders in what is traditionally a weaker quarter, the summer quarter, and it's I know that it's easy to say, is it just one thing? It's simply not possible to be delivering those sorts of numbers without expansion in every single area and without the business firing on all cylinders.
Yeah, just as an example, we already, even without signing a binding agreement with Sberbank, we already started to work on synergies with Sberbank, and you see a very nice incremental increase in orders from synergies realized with Sberbank, and we are very grateful to them for being such good partners.
Thank you so much. And then can you say something on the losses of this business? So obviously, I do understand that it's going to be deconsolidated, but just curious, are the losses increasing materially?
Yes, the losses have increased, of course, as the business undergoes a very strong expansion. So high growth always comes at a cost, and I think both us and our future partners are absolutely fine with current levels of investment, as we see that these investments will definitely pay off. So as you know, as we always said, and we said in our statements, both in terms of Delivery Club and City Mobile, we have enough capital to reach break-even, and the last couple of months allow us to fully reiterate our view and to be even more optimistic on the future of our businesses, because I really think we're building something big here.
Thank you so much. Very helpful. Thank you.
And now we'll take our next question from Anna Kurbatova. Your line is open. Please go ahead.
Good afternoon. Thank you for the call and congratulations with good results. I have two questions. First, on the community IVAS revenue. There is a very nice acceleration in year-on-year growth to 15%. So I wonder whether this is should be regarded as kind of a one-off as a result of let's say, your service development in terms of stickers and other services and goods in Odnoklassniki network, or we should be expecting going forward more or less same pace of growth in this revenue type. And the second question is on generally on advertising market situation. So you say that the market is somewhat more challenging than normally at the end of the year. So would be great if you elaborate something. So do you see overall softer demand on advertising, or maybe on advertising categories in your formats and social networks? So any comment would be very helpful. Thank you.
Thank you. I'll deal with your first one on advertising. I want to be clear. We're not saying Q4 is especially challenged or anything like that. We simply made the comment, and we've made it repeatedly during this year, that the backdrop to the advertising market for the whole of 2019 has not been as supportive as it was, for example, in 2017 and 2018. The macro backdrop is not as supportive, and you see that across the entire market, not just the digital market. Nevertheless, the trends that we've seen over the last few years, the budgets continue to shift from all other mediums towards digital, and then even inside of digital towards social and away from search. Those are trends we continue to see. Q4 is always a big quarter for us. It's always a seasonally very important quarter. There's always the question of whether budgets will be used up by the end of the year. But I think that I wouldn't want to misinterpret our comments to say that we're going into Q4 in any way sort of more cautious than we went into Q3. We've given explicit guidance about Q4 and about the second half ad budgets. And for the benefit of doubt, I'd reiterate that we would expect H2 ads to be at least in line with H1 in terms of the growth rate. With that, I'll hand over to Fedor on the IVAS side.
Yeah, so
I think on the IVAS, I think we had a very decent quarter, both in terms of music subscriptions and IVAS, and like old IVAS virtual gifts. But I think we'll not give line by line guidance for this business.
Yeah, I think the only other comment I'd add on IVAS, we're very happy that over the last few years we've managed to stabilize and then return IVAS to growth. we continue to expect that IVAS will grow slower than group, and so will continue to decline as a percentage of sales in terms of the overall numbers. And yes, I would obviously caution you, don't just take the Q3 number and run it forward. At the beginning of the year, we said that we would expect IVAS to be in the sort of, low single-digit growth for the full year. Clearly, Q3 has been very strong, and we would expect it to continue to grow in Q4, but I think it's unlikely to be at the same sorts of rates as Q3.
Okay, thank you very much. Thank you.
The next question is from Maria Shutanova from BSC. Please go ahead, your line is open.
Yes, good afternoon. Maria Shutanova, BCS. I have several questions about your VK Mini Apps platform. I was surprised to see that you now have already 16 million monthly users. So first question is, the growth in the third quarter, was it just natural something that happened, or you had to run some promise to achieve it? That's the first one. Second, I wonder if there is a difference between platforms, like you see high penetration of VK Mini Apps on desktop, for instance, because it's more natural than on mobile, or vice versa, or there is no difference like that. And third question, on monetization, how do you monetize this vertical now, and what are the plans in this respect? Thank you.
Thank you. So I will take your question part by part. So first, there were no special promise by VK, so it comes at no additional cost for us. I think what we have done is we have significantly first ramped up the product, and second, we have started to introduce very good use cases for our partners. So I think that now, in terms of VK Mini Apps, we feel as strong as never before with such partners as Citymobile, who see really strong contribution to their business, with up to 30% of rights coming from VK Mini Apps in certain areas. We see very good results from our collaboration with McDonald's. So McDonald's app on VK Mini App platform has more than 4.5 million audience, which is also quite big. AliExpress Russia mini app is also starting to gain traction. So I think, our mini app platform is starting to get more and more adoption by our partners, and the more partners adopted, the more traction our platform has. So I think we're starting to see some network effect here, and we're very pleased about it, and we expect much more strong growth coming ahead. So I think we're at the inflection point in terms of the mini apps program. I think that the more real effect our partners see from our platform, the more adoption we'll have. So in terms of monetization, now it's not factored into any of our models. Now we see very good extra incremental use case for VK in general, for more engagement into our, for example, payment products on VK, where we have huge synergies. I think in the future we don't have any problem coming up with some monetization product going ahead, but now we just expansion is in our heads. This is our primary goal. So I don't know, in the future it won't be difficult to either get some extra contribution in terms of advertising, and by the way, I think in the coming months we'll already see some extra ad contribution from VK Mini Apps. In the future we will either limit ourselves to advertising, or maybe come up with products that, for example, allow us to take some cut of revenue or something like that. But that's not factored into our models now. Yeah. So it's similar to the WeChat type of mini app ecosystem, and I think that's where we're getting now. Thank you.
Okay, thank you.
Our next question is from Vladimir Bespalov from VTB Capital. Your line is open. Please go ahead.
Okay, thank you for taking my follow-up question. I want to ask you about probably more color on this draft law on foreign ownership. Matthew already mentioned that you believe it won't affect much Mail.ru, but maybe you could explain some technicalities. Because my view is that Mail.ru is a BVI incorporated entity, and from this perspective, the draft law cannot, the law, if it's passed, cannot be applied to this entity, but rather to your underlying assets. Why are you sure that it won't affect you that much from this perspective? Because Mail Group will probably have to limit its voting power in underlying assets from this perspective. And the other thing is, even if we have like a 20% cap on foreign voting power, with the current beneficiary owners or voting power in Mail.ru, it's still a pretty low cap for the current shareholder structure to persist and to maintain the current voting power. How do you see this? How are you going to handle this going forward if this law is passed? Thank you.
Vladimir, thank you for the question. As you know, the Russian legislative process is a long one, and the gap between what is proposed at the beginning and what comes out at the end is almost in every case very, very different. And as you know, there are a number of consultations going on. You've probably seen the latest thoughts and recommendations that the voting limit would not be 20%, but we're 50 minus 1. Quite clearly, we continue to consult, and we spend a lot of time and effort to be as collaborative as possible with the authorities in this area. So I think that there are a number of different factors here. I'm not going to comment on how we see the law ending up in its final stage, but I think it's very clear that the final version is unlikely to be very close to what was first proposed. And then I would also draw you to the attention of the fact that in our Articles of Association, a majority of votes has always had to be owned by an approved Russian party. In this case, of course, that's MFT, which has a majority of the votes. So I would say that our confidence stems from the fact that we obviously consult and give our opinions very close, and we work very closely with the authorities in the drafting of the laws. And I think that based on those conversations, we see the law changing over time. And as you've always said, the end result is very rarely close to what is initially proposed. And as such, I think we have a confidence that Mail and its shareholders will be unaffected.
Yeah, and by the way, if I would, it's already our documents are very, already very well written, and we have an article saying that non-Russian shareholders cannot control more than 40% of votes in Mail.ru Group. So I think our documents are already should very well protect us from similar kind of legislation.
Okay, thank you very much.
And now we'll take our next question from, just one moment, please. From Sebastian Patulia from Jefferies. Please go ahead, your line is open.
Thank you very much. Hi, everyone. Strong advertising revenue this quarter, and it's likely that you guys continue gaining market share. What are some of the dynamics of these ad market share gains, please?
Well, these are all the usual suspects. It's mobile, video, and native advertisement, where we are by far the biggest player in Russia. At the same time, I think we're starting to get more traction in more performance and SMB-driven formats as well. And as you know, we previously, put much more emphasis behind these growth drivers. So we actually see context advertisement going very well. And it's already quite a significant part of our advertisement revenue. So these are the key drivers behind our ad growth, and we think they will persist going forward.
If I may follow up, please. It's mostly Delivery Club and advertising. What percentage of their ads are on social media platforms, and how do you guys account for this business's advertising spend?
Sorry, could you please specify your question? I didn't completely understand.
Sure. So Delivery Club, which in hold for sale, what percentage of their ad spend is used on social media as opposed to search offline advertising? So what percentage of total marketing spend is on social media? And how do you guys account for their advertising spend? How do you account for it?
It's Matthew here. It's very simple. We don't account for their advertising spend. It's free. While they're part of the group, of course, they get allocated a percentage of ad inventory to use, but there's no intercompany accounting for that. Obviously, post the closing of the JV, that situation will change.
So, thank you very much, Matt.
And as to your first question, obviously, we don't break out the Delivery Club advertising budget between social and search and third parties. So, sorry, we give a lot of detail, but we don't go down into that level.
Thank you very much, Matt. And one last follow-up, please. And that means that when the JV will close, there is there's a possibility of the cost base for Delivery Club to increase, as now they will pay for advertising on your platform, and also your advertising to increase. Is that correct?
That obviously we don't know exactly where the JV will advertise. It'll have its own management, but clearly they're going to be spending some money in social. Yes.
Okay. Thank you very much.
But just to follow up on that, I would also, of course, stress that the JV is extremely well funded, and as we've said repeatedly today, has sufficient resources to see both Delivery Club and City Mobile through to profitability.
Thank you.
Just one moment, please. We have a question from Masha Khan from HSBC. Just one moment, please. Just one moment, please. She's joining back into the queue.
Hello, operator. Anybody?
Her line is open. Miss Masha Khan, would you mind asking your question, please?
Hi, Masha, you with us?
Hello?
Hello.
Hi.
Hello, can you hear me? Hi. Thanks for the opportunity to ask a question. I wanted to ask about what's your view about sustainability of margins in the core social networking business, and what's your approach to online video investment, whether you plan to invest more in online video content. Would appreciate if you could answer that. Thank you.
Margins.
Yeah, I think around margins, you've basically seen the dynamics and the margins that we have had in the communications and social in the last few quarters. So basically, the margin is staying relatively stable on a year-on-year basis. So I think we are going to continue that trend going forward in the next quarters.
So on online video, we are already one of the leading platforms in online video in Russia. with both Odnoklassniki and VK showing very solid growth in terms of total views. So VK is actually growing 45% year on year in terms of total video views. So now we treat each other more as a platform, communication platform for video. So we like UGC content, professional UGC content. We are not really into very big buying of content like some of our competitors, because I don't think it reflects the key values of our platform. Probably in terms of professional video, we might pursue some partnerships going forward in the future. For example, like we have now in Combo in our subscription product, but we do not envision very hard investments into content on behalf of Mail.ru Group or some of its destinations. Yes, we are definitely not Netflix, and we do not plan to be. We are an IT company, and we are really enjoying this status.
Okay, thank you so much.
Thank you, and apologies for that. We'll now take our next question from Miriam Adisa from Morgan Stanley. Please go ahead. Your line is open.
Hi, thank you for the follow-up. Just one question from me. Could you talk about your expectations from the launch of the international gaming platform in Q4? Have you already done a lot of marketing ahead of this, or will that fall into the fourth quarter? And then if you could just talk about if you're expecting a meaningful revenue contribution from that in the fourth quarter. Thank you.
Thank you. Look, it's part of the wider game strategy, and I wouldn't want to put overemphasis on any one aspect of the wider game strategy. Clearly, I think there is a real opportunity here. The marketing spend thus far has been relatively low, and it will take a time to build this up. So I'm not expecting this to be a meaningful item in the first couple of quarters, certainly.
Great, thank you.
Our next question is from Slava Degtyarev from Goldman Sachs. Please go ahead. Your line is open.
Yes, thanks for the follow-up. Can you elaborate whether you are making any investments into City Mobile throughout the third quarter? And also, can you disclose the progress of the music subscribers throughout Q3 as well? Thank you.
Yeah, I think will be returned to us.
Yes, on City Mobile, we have been financing it through loans, and based on the preliminary deal terms, we expect those loans to be returned to us as soon as the deal closes.
So in terms of music, I think the music continues to develop very well. We see very good traction in this business, and we are bullish on it as never before. So we plan a couple of very big product releases, both on Boom and VK products, which will be followed by very big boost of these products, and then we will, share with you some interesting numbers.
Thank you.
Once again, please press star 1 to ask a question. There are no further phone questions at this time, sir.
Thank you very much for your participation, and if you have further questions, you know where to find the team here. Thank you very much, and good morning or good afternoon.
This concludes today's call. Thank you for your participation. You may now disconnect.